Trading stocks, options on stocks, futures, options on futures, and retail off exchange foreign currency transactions, Forex, involves substantial risk of loss and is not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. TradeGuider Limited is an authorized representative of Forex Max Limited and regulated by the Financial Conduct Authority number 229906. G'day folks, this is Younes from Supercharge Wyckoff VSA.com. I'm the author of Supercharge Your Trading and Investment Account using Wyckoff Volume Spread Analysis. In this video today, I just want to talk about how to identify when the smart money is becoming active in the markets. Okay, so you hear Gavin Holmes and myself, we talk about weakness appearing on up bars and strength appearing on down bars. Okay, so on this chart, I've got a perfect example of weakness appearing on an up bar. Now, if you look closely at the chart, you can see where there is ultra high volume. Right. Here is the ultra high volume, and this is a chart of the Aussie USD 15-minute chart. We can see ultra high volume on this up bar. We got a sign of weakness, and there was, sign of weakness 26, supply coming in. Now, the very next bar was up, so this principle did not confirm. Now, if you look at the volume of the following bar, it's much, much lower than the previous bar. Okay, but price still closed towards the top third of the range. Now, the bar after that, if you look closely at it, they try to mark prices up, but it closed towards the middle of the range. Okay, so that to me is weakness, and we did get a VSA principle here, sign of weakness 90, possible hidden selling. Okay, so but with it closing in the middle of the range, that is weakness. Okay, and its prices are not likely to progress higher than the high of this bar. Okay, now why does weakness appear on an up bar? Now, the reason why weakness appears on an up bar is because that professional money are starting to become active. All right, they're starting to become active in the markets. Okay, so we can see here that we've got ultra high volume on this up bar. This is when where they're starting to sell their holdings. Okay, but they don't sell their holdings all at once, because if they did that, price will just collapse. Okay, so they gradually sell their holdings, and for them to sell their holdings, they need buyers in the market. Okay, so they create a level of activity in the market to entice the retail trader to go long in this case. Okay, so we can see here they've pushed prices higher, right? And this is the bar that finally says, okay, I think they're done raising the price, because look at where it's closed. And then they're going to start to offload. Okay, and when they start offloading, they always test, right, to see if there's buyers. Okay, so we get, look how low the volume is here on this up bar. All right, this is a no demand bar. Okay, very low low volume. We get another VSA principle here, no demand once again. All right, so clearly you can see that there's no demand to drive prices higher. And what normally happens when you see ultra high volume bars appearing, all right, you'll normally see price start to mushroom over, as it has in this scenario. Okay, prices have started to mushroom over. All right, so the professional money are testing to say, are there any more buyers? Are there any more buyers? And with low volume on these up bars, all right, that suggests to us that there are no buyers in the market. Okay, we can see they dropped the price. Okay, so that's how the professional money play the game. Okay, they enter the market. You'll see ultra high volume. All right, they'll entice the retail traders to go along while they are selling in the background. And this sort of movement is normally done around a news announcement. All right, that's when they become active, because that's the perfect time for them to manipulate the markets. Okay, and we can see what happened here. Price mushroomed over and price then collapsed. Now if we look down here towards the lows, we can see ultra high volume on a down bar. And ultra high volume on a down bar is strength. Okay, we got a VSA principle here, a potential stopping volume, okay, which is basically stop price in its tracks. Okay, the next bar was down, which didn't confirm, but the volume was ultra high, so I think this pricing action here will basically consolidate in this area. Now, for it to go long, all right, for prices to go higher, we should see continual testing at these lows. Are there any sellers? Are there any sellers? Are there any sellers? If there's no more sellers in the market, then this will push higher. Okay, and that's simply what happens. You'll see now. You should see price create a saucer shape here, and then push higher if the professional money want to take prices higher. Okay, so that's how you identify when professional money are entering the market, right? And a likely change in behavior in a instrument. Doesn't matter whether it's futures, forex, or stocks. Okay, the principles are the same. Okay, so here I've shown you where there is weakness entering the market. And now there is strength starting to enter the market here. Right? If we are going to see further strength, we'll see testing before the next up move. Okay, so if you've got any questions about the VSA software or anything that I have discussed in this video, you can send me through an email to info@superchargewyckoffvsa.com. Have a great trading day, folks, and I'll see you in a future video. Bye for now.